Jeff Peterson from Heartland Farm Partners is our grain market analyst this week. DTN South America correspondent Alistair Stewart, who you've seen on this program before, reported Wednesday highways in Brazil were clear for the first time in 2 weeks. Protesters had blocked roads for days, causing problems for the country during the middle of its soybean harvest. The market here reacted sharply. We talked with Jeff Thursday afternoon about South America, important USDA reports at the end of the month, and the possible outlook for corn. Soybeans ended last week positively. Describe the struggles they face this week.
Yeah, what a difference a week makes, Jeff. You know, we had all the talk about the strike last week, and that was a big deal. I mean, there was a lot of news on it. To think that you had over 100 roads closed across 11 states, that's a lot of trucks stopped. And compare that to this week, though, everything's really kind of died down. We only show about 7 major roads closed across about 4 states right now. Now we'll have to see with the meetings that they have next week whether or not this returns or not, but it looks like it's getting under control.
You don't think this is a long-term thing that plays out in this market?
You know, I don't. The only way it would turn out to be a long-term thing is if for some reason it impacted soybean harvest to the degree that there was higher than normal harvest losses, and we haven't seen anybody talking about that yet.
Next week, we'll also get the crop report for March. What are your expectations and what we'll see?
Yeah, that's a report that, you know, comes out next week. We don't expect to see any changes on supply. Those are all set. On the demand side, we really think USDA's got the supply dialed in or the demand dialed in good enough for corn and beans. We don't really expect to see any major changes. So we don't think that'll be anything that'll come out of that has an impact on the markets right now.
And no changes in South America?
Well, there's a few things going on in South America, but what it kind of seems like is if you run into an analyst who wants to go ahead and lower the yield for Brazil, they immediately go ahead and raise it for Argentina. So, you know, that's what we're seeing. Looks like the safrinha crop is getting in the ground pretty well. So we'll have to keep a close eye. You know, that corn crop's going to be a big crop again. So we'll have to keep a close eye on that as the summer progresses.
At the end of the month, we'll get reports on grain stocks and prospective plantings. Until then, what do you expect soybeans to do?
Yeah, I think overall in the soybeans, you know, we've been kind of bearish beans for quite some time here. I think we see a sideways trade in here. There's still some uncertainty of South America yet that keeps a little support, but it's going to be a general drift lower is what we're expecting, you know, over the next couple weeks going in the report at the end of the month.
And in corn?
Yeah, we'd see a similar action, probably not as much downward drift though, chopping sideways. Now the thing that's unique about corn though, Jeff, is that we've got it coming into a pennant formation, you know, kind of a sideways triangle, and we're getting very, very close to where those lines intersect. And what basically that sets us up for is we've got support really close to us underneath, resistance very close to us on the top side. So if we see a breakout, we might have a little bit more move in the direction of the breakout.
What do we know about crop insurance prices set during the month of February?
You know, they did get set. For corn, it was $4.15, and for soybeans, we'd have been $9.73. What we find is if we start putting those into some break-evens, you know, some guys might be able to be okay on corn break-evens at that level, but they won't be on beans. They'll be losing some money at that on bean prices. In
a few minutes, we'll hear more about ethanol and biodiesel, but numbers from this week, what does it show for ethanol production?
Yeah, right now, you know, numbers was 4.1% above last year, 931,000 barrels. Interesting enough, the year-to-date numbers were still 5.6% ahead last year. USDA's last estimate would only say they're only looking for us to be up about 2.3%. So far, we're on pace to meet their numbers. We do continue to see a large amount of stocks, though, Jeff. Just to put this in perspective, we're up about 34% right now compared to a year ago on the amount of ethanol stocks.
Do you have any targets that you're making right now for sales in either 15 or 16 for either corn or beans?
Yeah, as starting first on corn, I would say if we can go ahead and get D's 15 corn up in that 420 area, we want to be a seller there. 435 on the D16. As we move over to soybeans, 985 and then ultimately $10 on both the 15 and the 16 are areas where we want to get sold, and we're getting pretty aggressive. We're actually would like to be up to most of your insured bushels sold there on beans at those price levels.
End of the month, like I mentioned, 2 important reports. What are your expectations?
Yeah, those are going to be some interesting reports. We don't look for any big surprises on the stock side. Overall, but you never know, and if it's a surprise, it'll come because of basically the feed demand. But over on the acre side, that one could be a little bit of a surprise. What we're finding going in, you know, we're kind of expecting corn acres down about 2 million, bean acres up about 3 million acres. But the interesting part, Jeff, is we do break evens right now. It's hard for us to go ahead and do a break even that makes money on soybeans. So as a result, we're starting to lean a little bit more towards the fact that maybe corn acres are only down 1 million, Maybe bean acres are only up 1.5 million to 2 million at the most. So I think there's going to be a lot of uncertainty going in, and I think that's part of the reason we shouldn't expect to see this market just fall out of bed. They got to get a little more comfortable with those reports before we ultimately put some more pressure in this market.